Hello and welcome to another episode of Geopolitical Cousins. I am your editor, Jacob. We've got an extended cousin on the show today, Rory Johnston, here to talk us through why oil experts are freaking the out about the closure of the Strait of Hormuz and why markets seem completely unbothered. Let's get into it.
I am, yes.
That's fantastic. Even better.
That's what I'm saying.
Are you Canadian?
No pre-talk. Start recording.
All right.
I'm already recording. You're Canadian?
Yes. Rory, so
are you really
where
Canadian?
So where am I from? I was born and raised in Kingston, Ontario, and I went to Queens, and then I went to U of T for grad school. So I'm about as far from the oil patch in Canada as you can get.
Yeah.
Which is why it's very strange that I'm devoting my life to the study of petroleum liquids.
That's amazing. And so where are you right now? Like where are you?
So I'm based in Toronto now. So I live in Toronto, kind of in Midtown.
Nice.
I moved here originally for grad school. I worked at Scotiabank for a bunch of years, and then kind of just haven't left. And I should say, you guys are very popular with Canadian government officials. I just wanted to give a shout out to my buddy Dave, who was the one that initially highlighted before I listened to the episode the call out of my work. And both in a good way, and then some side sass. So
Yeah.
I'm here to address it.
Well, first of all, let's fix that popularity problem, because as the only American on this podcast, how do you guys feel about becoming the 51st state? Are you looking forward to it speedily in our days?
Deeply no. Is there any other way to put it? Again, it's funny. And Marko would know this. I would say my whole life growing up, there's always been this like undercurrent of like American skepticism in Canada, the whole like meme of what is a Canadian? Well, we're not an American. But I would say that I always imbued the kind of more pro-American side my entire life. I lived and interned in DC when I was in grad school. And yeah, it's been a bit of an unwelcome shock to feel like our closest trading partner. I mean, this time last year, I was writing entirely about trade war and potential tariffs on Canadian oil, how ludicrous it seemed at the time. There was even a couple of days where it was priced into the market. So it's like, so hopefully now this all kind of goes, hopefully it all rolls over and we end up in happy times again. But I would say no doubt that any nascent pro-Americana that had been rising in Canada through the past years has been, stifled in the cradle. And now it's, all about trade diversification, pathways to the Pacific. How can we get our oil to market without having to go through the States?
Canadian nationalism, baby. That's what
Canadian nationalism, baby.
Yeah, I mean, like, it's yet another thing that President Trump has managed to do. All I would say, I'm just going to use that old, great Charlton Heston line from my cold, dead hands. That
Amen.
is the attitude of a lot of people in Canada. People are fucking studying topography. They're studying invasion routes. They're studying egress lines. Like, I got buddies who are in construction, lumberjacks, the kind of dudes who, like, don't drive Honda Ridgeline trucks. You know what I mean? Yeah, we have those too in Canada. Just FYI. Like, it's not all just Lululemon wearing, like, latte sippers who spec out their next Arc'teryx jacket, although there's also a lot of that.
That's just Midtown Toronto where I live.
Yeah, that's right. And by the way, there you go, Rory. That's where my loyalties lie. That's UBC little football, which is ironic.
Nice.
Because of course the UBC Thunderbirds don't really play football. But anyways, like the point is, yes, I claim British Columbia as my adopted motherland. Now, Rory.
Yeah.
We've got a game for you, my friend, because I've always enjoyed your presence on social media. I think you're really thoughtful. But what I've been enjoying is your increasingly your level of angst is approaching, so like light myself on fire level, which we're throwing shades on you out of love because
well, entirely deserved right now, to be clear. Like, I mean, we're 2 months into this and crude just broke back above $100 a barrel on Brent. So what are we doing here?
Listen. So this is the gimmick we're going to do with you because, you obviously have a great presence on social media. People may not know you. People know you. I mean, Rory is here because he knows infinitely more about energy than either Jacob or myself. Jacob and me, we use geopolitics to kind of think about the markets. Obviously, energy is always at the middle of that. So
Yep.
we are energy expert adjacent, but you are an actual expert. And so the game we have here is, can we make Rory light himself on fire? There are four
I welcome
stages.
the efforts. It's pretty easy these days with my current sleep deficit that's currently matching the barrel deficit in the market.
So I'm going to MC this. Jacob's going to be the Charles Barkley. He's going to pivot into that role, which I usually have.
I love it.
So I'm usually the Charles
Barkley.
Barkley.
Up and it's great. I'll talk about those big women in San Antonio every once in a while as a complete non sequitur.
So usually I do that. Usually Jacob's the MC. We're going to flip this around. I'm going to ask you a series of questions, and then you're going to answer them and say which of the four stages of lighting yourself on fire you are. The first is Rory sends a snarky tweet about how that reality leads to energy doom. So the first one is just like, I'm sending a tweet like, you guys are fucking crazy. The second is Rory makes himself a stiff drink with Crown Royal naturally, because hashtag Canada. The third is Rory slowly begins to douse himself with gasoline.
Okay.
Assuming that gasoline supplies are available. I mean,
they may not be.
This is why we're doing gasoline, not diesel.
Yeah, or kerosene. Yeah,
kerosene.
And then finally, Rory lights himself on fucking fire. That's the fourth level. So we're going to start off the first question. And by the way, the whole idea here is the world is too complacent. Now, I am more with the finance bros, which is where there's a tension here, just built-in tension, which is cool. I love it. We're going to play on that. But I agree with you. I think the world is complacent. If things don't change, if we stay on this trajectory linearly, the term I'm using, Rory, is we're going to be in the world of canisters and cannibalism.
Yeah, I think that's about fair. And I think that sounds pretty doomy, Marko. I've been accused of being the doomer.
No, I know. It's funny. Somebody just said that. I have a doomer on.
I know. And I will say, I'm going to play this game, and I'm going to tell you afterwards because I just published a piece this morning about why I think the market reaction has been relatively sanguine, kind of steel manning the market's reaction. Again, meet the market where it is. But I'm going to do that afterwards. So let's play the Rory lights himself on fire game first.
And by the way, we may get to that through the questions. But before we do that, you know what I hate? I hate when you get a guest on and you wait until the end to tell the people where to find your wisdom. So where do we find your wisdom?
Well, my snarky tweets are on Twitter at Rory_Johnston. I'm also on Blue Sky for the more progressively inclined among you. And then you can also follow all of my formal, less snarky work, not always non-snarky, but less snarky, on commoditycontext.com. I have a weekly report, 3 monthlies I publish, and a bunch of thematics. This morning was one of those thematics. And I also host the Oil Ground Up podcast, where I mostly just riff on, barrel counting and kind of deep, wonky oil and gas stuff with other analysts. So I encourage you to join me on all of those platforms.
Awesome.
And if I'm doing my job correctly as Charles Barkley, I feel like this is where I would interject and say, any of you who are looking at Rory on social media anyway, I mean, the only people who use social media are losers in their basements who don't have anything to do with their time. Is that right? That's why...
It's mostly
Charles Barkley
correct,
isn't
honestly.
on social media. I am.
I'm mostly tweeting when I should be doing actual
to what I'm
work.
supposed to be doing here.
All right, so let's go with the first question. And Jacob, if you have questions, obviously throw them in there. I've got about 5, 6. We're going to run through this. The first one is for those of you who need a very quick lesson. Walk to us how important Hormuz is. What are the numbers here? Just basic numbers of what makes Hormuz so special and what makes it important.
Yeah. So just for the base context for people that aren't used to following the oil market, we measure the oil market supply and demand typically in millions of barrels a day, because the whole thing is a gigantic flowing kind of constant chemistry set that can't stop and start. So flowing barrels a day. Roughly right now in the world, prior to the war, I should say, we had roughly 105 million barrels a day of production and consumption in the market. For ease, let's just say 100. Makes the math really, really easy. So out of that 100 million barrels a day of supply, Hormuz, prior to the war, was shipping roughly 20 million barrels a day, or 20% of the world's supply. 15 million of that was crude oil. 5 million was products, mostly diesel, jet fuel, which is important that we'll get to, and then also natural gas feedstocks and liquids for petrochemicals in Asia. So that's the first chunk. That was the first thing we lost, was that 20%. Now, thankfully, we have not had to process the entire 20% supply loss. There have been successful reroutes, both physically rerouted as well as some barrels still up until very recently getting through Hormuz. So the largest single reroute was the Saudi East-West pipeline. And again, I know that you guys have talked about this a lot over the past couple episodes, but just to kind of reiterate here.
Please do. Yes.
So the Saudi East-West pipeline was built in the 80s specifically to hedge against this exact kind of risk. They saw the tanker wars during the Iran-Iraq war. They worried that the strait could be closed, even though, notably, it was never actually closed to transit through the 80s, when there was actually more fighting and more damage to tankers at the time. So I think behaviorally, the market has changed fundamentally since then. But it was built during that period specifically as this existential hedge against Iranian control, or any control or blockage of the Strait of Hormuz. So that is a 7 million barrel a day pipeline that runs between the east coast of Saudi Arabia and the Gulf to the west coast of Saudi Arabia at the industrial port of Yanbu. So that terminates in the Red Sea. There was about 2 to 2.5 million barrels a day flowing in that prior. So, 7 minus 2 to 2.5, you have 4.5 to 5 million barrels a day of switching capacity from the Gulf over the Red Sea. So that's the biggest single chunk. That reduced us from 20 to, let's say, 15, easy math right there. In addition, you have an Emirati pipeline that terminates at the port at the Fujairah port on the Gulf of Oman. And you've also had Iranian oil continue bizarrely through this crisis thus far, transiting the strait at 1.5 to 1.8 million barrels a day. All that together, out of that initial just more than 20 million barrels we had going through Hormuz, we've successfully rerouted or, allowed through roughly 7. So the most important number in the market right now is the barrels that haven't been able to be rerouted. And that is roughly 13 million barrels a day across the 6 non-Iranian Gulf states. And that has been pretty much steady on shut-ins since mid-March. And that is essentially, if you think about it, this is the debt we are accumulating in the market every day Hormuz remains closed. We drop 13 million barrels more in kind of total stock level of the global oil market. As of today, we're sitting at roughly 550 million barrels of oil that were supposed to be produced this year that now will not be produced. Accounting for restart times and everything else, even if we get Hormuz reopened on May 1st, that total, because it takes weeks to months to restart these production facilities and you need to get tankers back in, et cetera, in total, if we reopen on May 1st, which I think is the most optimistic scenario we can have right now, that total yield of unproduced barrels rises to nearly 1 billion barrels. That's a nice big billion with a B number. Now, people will kind of say, okay, there are roughly 8 billion barrels of stocks in the global oil system. And again,
what do you mean by that? Like in the ground, like strategic reserves?
No, when I say stock, when I think about the oil market, I think of it as the world's largest stock and flow model. I guess you could say maybe Treasury is something actually the larger stock and flow model, but physically, big stock and flow model in global oil. So for a stock, it's any barrel that has been produced, but has not yet been consumed or burned. But that includes basically all oil and water, of which there's more than 1 billion barrels on water. That includes all oil in pipelines. That includes strategic stocks, commercial stocks, everything in between. In total, the most important pool or type of stock is what we'd call commercial inventories. And that's the actual private sector stuff that after everything's said and done, there's a surplus or a deficit in the market. Eventually, it's caught by or kind of satisfied by these commercial stocks, of which there's roughly 2.5 to 3 billion barrels. Now, that's a lot, right? That's a lot of cushion relative to even a 1 billion barrel loss. But I should note that the working capacity of that's probably more like 1 to 2, because you're always going to need stocks in the system to kind of continue to lubricate and kind of make up for timing mismatches and everything else. So the system has to always flow, even if you don't have a barrel arriving that day. So you need stocks to kind of even that out. If that billion barrels falls entirely on commercial stocks, that's where the pricing, in my humble opinion, that's where we're sanguine. That's where, and I think there are ways to soften that, right? I think that SPR releases, of which we've already had the IA announce 400 million barrels, the largest by more than double thus far in history. That I treat in my model as supply, not an inventory drawdown. So that comes, and if that can catch a lot of that, then you can take 400 million barrels out of that billion barrel loss. You've also had declines in oil on water. So this is, and what we mean, as I was saying, you can't draw oil and water to zero, because if you did, it means the oil market no longer exists. But
Yeah,
you
because
had
these are
excess.
ships.
Yes,
Like, they're
these are
going
ships
somewhere.
transiting. Exactly.
And you can't just be like, whoa, you're not going, like, like a lot of the oil and water is just oil going somewhere. It's already bought.
Exactly.
It's not stored, but there is some that is just floating in space because it's like a sanctioned barrel of crude or something.
That's exactly right. And I think that, to the Trump administration's credit, prior to the Iran war, they had done considerable they had progressed considerably in tightening the noose around both Russian oil, Russia's oil industry, as well as Iran's, and as well as Venezuela's. Venezuela's oil and water excess, because that's, again, it's not just total, but it's the excess of normal oil and water that's effectively a stock that can get drawn down. Venezuela was mostly kind of, we were rid of that prior to the Iran war. That drew down really quickly after, the revolution in Caracas and Trump's takeover of the Venezuelan oil industry. But we still had relatively high Russian and Iranian oil and water. And that was explicitly kind of forced into the global system, or facilitated into the global trading system, by Treasury's decision to remove sanctions on both Iranian floating storage for 1 month and now Russian floating storage for at least 2 months. That's what we know so far. Even after Besant said 2 days prior, absolutely will not extend Russian oil sanction relief. And then he did 2 days later, very quietly on the side. So aside
Scotty
from
doesn't
that,
know. Don't worry. I understand.
So in total, I think that's, so you had them as 200 million barrels, 150 million barrels of excess Russian and Iranian oil and water, and the SPR release. I think and this is an important if we get another SPR release of the same size, which is increasingly kind of my base case scenario, I think that the IEA will release another strategic release of roughly 400 million or so. For perspective, out of the total 400 million, they say was out of a total government-controlled, explicitly strategic, and then commercially, mandated, essentially, of 1.2 billion. So they could do that 2 more times. If they did that, you could absorb the lion's share of the deficit out of commercial stocks, and you could kind of get out of this without a total kind of rip-roaring oil price on the other side of this. That said, in doing that, you would have drawn down global strategic stockpiles by 2/3. You would likely be in a situation of ongoing strain and a higher risk environment. I'm very curious to hear how you guys think about the future of Hormuz, and if this, I've been talking like, now that Iran has broken the seal of kind of closing Hormuz, like I would say this, if you would ask me 3 months ago what the odds of Hormuz being closed, I would say like less than 1%. Now on an annual basis, this is like 10%. That's much higher than I would be comfortable with 20% of the world's oil flow on any given year. So I think so out of that, you're going to actually want more strategic reserves on the other side of this crisis, most notably out of non-IEA countries in Asia. That, that's going to have to rebuild. So that will manifest on the other side of this crisis as demand, in the same way that SPR releases are supply, SPR builds are demand, at least in my mental model of the industry. So overall, it is not completely unreasonable that oil prices today are still relatively sanguine, particularly after we've shaved off the true tail risk of
I gotta say, Rory, sorry to interrupt you, but like, you're cooking and I love it. But I gotta say, like, doesn't sound that like, sorry if I'm a finance bro here.
I have a sharply pointed question that I want to, because I want to stress test exactly what you're saying.
Please.
And this is going to be impossible, but I'll ask you to do the best you can. I mean, we said May 1st was the most optimistic scenario. At what day of closure of the Strait of Hormuz do we go from, like reserves, like market, blah, 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 to actual shortages? Like, how long does this conflict have until we're no longer speaking about market machinations and IEA this and SPR this, where it's just like literally there is no oil to buy because the
Yeah.
system has exhausted itself. Do you have a sense of what D-Day is from that perspective?
So I've been pretty resistant against an idea of like a point of no return, because I think the system has always kind of dynamic responsiveness. So I think that there is some there. But in terms of, let's say we don't get another IEA release. In this piece I released this morning, I essentially modeled what the oil market, both the level of the futures curve and the shape of the futures curve. So very basic oil futures 101 and any futures curve 101. People will normally think if they see the futures curve and it's pointing down, further in time, they think of that as a bearish signal because they're like, oh, well, the market's saying the price is going to go down. It's actually the opposite. And it's not that they're charging a discount for future purchases. It's that they're charging a premium for prompt, ASAP deliverable barrels. So what we're in right now is a very, very steeply backwardated market. And that is exactly what you'd expect. If you have a massive hole in the market, essentially disincentivizes and creates an opportunity cost to hold inventory rather than just releasing it to the market. So what you would expect in this moment is roughly more or less what we've seen. I think arguably we've seen more reaction and backwardation than the level of the curve, which could indicate some expectation function that this is going to be short-lived. But generally, you can make that make sense. But if you hold the same, and I was basically modeling a 4 million barrel a day net draw. So let's say 40% or less of the total supply loss hitting commercial stocks for March and April, and that ramping to 5 million barrels a day of net draw in May and June. In that case, we end up roughly right around where we are right now in April. But then you rapidly ramp higher in May and June. And that's basically because we went into this crisis with relatively high stockpiles. It's funny, people think of me now, because I think I have gotten much more attention to this crisis. Everyone thinks of me as this like alarmist kind of hair on fire permabull. My reputation in the oil market prior to this was that of a perma bear. And I wrote a lot of pieces going into this year on the coming oil glut, on how overwhelmingly the view, I believe supported by the fundamental data, was that we had an oversupplied market and there would be downside pressure on oil prices for the next 18 months at least. And I kind of joked, like the only thing that would drive us to triple-digit oil would be like if someone crazily, closed the Strait of Hormuz. And voila, that's exactly where we are. And shockingly, again, to a degree shockingly, because I would have expected, I always say that the oil market isn't forward-looking. It's Jeff Curry of old Goldman fame has a great line about how like commodities are not anticipatory assets. The pricing of them is always built into trying to clear the spot market. So backwardation, if there's a deficit, and contango, which means there's a deep discount on spot prices if there's an oversupply. And I think that is the truth of it, is I think in some ways my error, because I was saying, like, I came out with $200 oil very quickly. I'm like, holy crap, guys, like this is the big one. Like I am not an alarmist. And normally, all respect to geopolitics. But I think like in the oil market, selling geopolitical spikes was like the thing to do for the past decade. Because normally geopolitical tensions and risk does not actually lead to physical supply loss. This one, in some ways, the supply loss is larger than the perceived geopolitical risk. And everyone's just focusing on trading the geopolitics and are forgetting about this accumulating time bomb of unproduced barrels in the Gulf. And that, I think, is where I'm more concerned. But I do think that my error was, I would say the oil market's not forward-looking, and I expected it to be forward-looking because clearly it's Hormuz, right? Clearly this is the big one. Clearly we see this wave of deficit coming towards us. But I do think fundamentally it's not going to react until we see it in the inventory data in visible OECD markets. And in fact, U.S. stockpiles of crude oil are actually higher than they normally would be for this time of year, and they built more aggressively over the past 8 weeks. Most notably, likely because you're going to see a large swell in U.S. Gulf Coast exports of crude oil. Those are basically staging stocks. But I think that's one of the things that once we start to see deeper draws in high-frequency U.S. data and the IEA publishing big draws in OECD commercial stocks, I think that's the only point now that we're going to see a real true reaction and a durable reaction to the upside that's not just going to be tweeted back down by Trump at the next kind of jawbone attempt.
But wait a minute. I mean, that's what is expected. We expect drawdowns. They've been announced. They're like flagged. And as you said, there's still like 2/3 of inventory left. So why would that cause? I mean, isn't the price currently as low as it is because of the anticipation of the drawdowns and the fact that, as you said, there's still like 2/3 of global reserves that can be drawn on?
2/3 of global strategic reserves, and
That's
I should say that is itself the reason I don't treat it as even a normal inventory is because it can't naturally draw. It has to be a discretionary policy choice to draw down those stocks.
But that's what I mean. Like, isn't the price of crude like reflecting the? You almost posed it as a question, like, wow, if they dip into that this means it lasted longer. But I would flip it in the other way, and maybe I'm wrong. The fact that it's there is what's keeping oil prices relatively low, because it's like, of course they're going to draw on it.
Potentially. And I think this is a similar theory or thesis to, like, let's say, a classic, ex-Hormuz oil crisis. And it's the same kind of thing thinking about OPEC spare capacity, right? That, like, theoretically, there is some upside supply that can be tapped. But the first thing I'll say is, first, the SPR release has been ham-fisted from the start, particularly the Trump administration side. The release was undersubscribed from the beginning. They injected all of this additional complexity. I won't get into the exchange dynamics, but they tried, after lambasting Biden for so long for its SPR draw during the 2022 crisis, after Russia invaded Ukraine, they were kind of very wary of dipping and drawing down the SPR too hard. And I think as part of that, they have attempted now to have their cake and eat it too, get the SPR release into the market, but structure it in a way that ensures that it's more fully on their side. But I think anyways, the mechanics of it push too much logistical burden onto counterparties, which means that, like, the first solicitation they had to sell this stuff was only half subscribed, which would be weird,
strange,
if it was a crisis, right? And I think it just comes down to because again, there are still inventories available, and I think the biggest challenge with this is that this crisis, and I'm sure you guys have been tracking this constantly, like the story changes like 8 times a day. Oil markets, the barrels from Hormuz took 6 weeks to 7 weeks to end at their final location. So even we have this moment of, like, let's say there's demand destruction in Asia, and I think there is demand loss in Asia, but many of those consumers are wealthy enough to pay for barrels elsewhere. It just takes time to close these arbitrages. So I would say that over time, let's say again, and where I get really doomy is let's assume like an indefinite closure of Hormuz. Like, what would it take to actually destroy 10 million barrels a day plus of demand? And that, I think, is where it just gets, like, that's where you get $200 crude. That's where you get $300 jet fuel or more.
That's canisters and cannibalism.
And cannibalism, right? For sure.
Let me ask you one kind of maybe technical question, but it does come up a lot. Houthis have kind of stayed on the sidelines. I'm on Team Houthis. I think that they've got character. They've got sass.
Character. Yeah.
So the East-West pipeline that its terminus is in Yanbu. Where do the vessels from Yanbu have to go? Because, like, from what I understand, I mean, VLCC can go through Suez, but it's got to be, like, not laden with crude. Is that correct? It has to be, like, how much? Like, VLCC, a very large crude carrier, has like 2 million barrels on it.
Correct.
How filled can it be to go through Suez Canal?
I don't know the exact answer to that, but I want to say it's like half.
Okay.
And basically, they offload into the Sumed pipeline, which is the pipeline that travels adjacent to it, and it's got about a 4 million barrel a day capacity on the pipeline.
And so, let me just ask you. So, like, is it possible that all of Yanbu traffic can go through Suez?
It's a good question. I don't think all of it. And not to mention that there is pre-existing traffic through the region as well. That it's not just Yanbu, it's other things that are also going to try and go through there. My general view is twofold on this. And I think essentially the question is, like, what would happen if the Houthis closed the Bab el-Mandeb Strait? Right? That's the $1 million question here.
That's what I'm asking, right? Because that is like you go from Yanbu down south into the Indian Ocean.
Yep.
Let's say that's closed, and now we got to go through Suez. Is it feasible, and can the entire 7 million barrels a day of East-West pipeline continue to function if that is a risk?
I do not believe the entirety of it, but I think most of it theoretically could sneak out through Suez. The challenge is that it takes double the time to get to Asia from the Red Sea via north around the Horn of Africa, right? I think that's the biggest challenge, is the additional time. And I keep describing this crisis as fundamentally one of lost time, lost barrels, lost time. And I think that is, if you just, tie up even more barrels in oil and water on this longer circuitous journey around Africa, then yeah, that supply is effectively lost to the market so long as the Bab el-Mandeb Strait remains closed. And I think the question here is as well, like, why haven't they done anything yet? Like, why haven't the Houthis closed it? And I think I'm very curious to hear your views on this as well. But my view is essentially that Iran has held back a bunch of escalatory moves between the Houthis, between attacking upstream infrastructure. Like, we know that they can hit Abqaiq. They have not hit Abqaiq through this crisis thus far. There's a lot of upstream assets they have not generally hit. They've only reportedly hit the East-West pipeline once, but obviously you can hit the pipeline and the pumping stations. And if you took out Abqaiq, the pipeline is kind of taken care of in a large piece as well. So like all of this, we know that they can escalate more and that they've held back, trying to hold back some escalatory room. But now there's this question of like, what would actually get them restarted again? Because now the fighting has ostensibly stopped during this ceasefire. There's still skirmishes and various parties still firing each other, but in total, generally a ceasefire. But the question now is like, does this ceasefire just last forever? Or, because I think again, like if you had to describe to me, if I was like, hey, Iran, the best possible scenario for you guys, because what's actually happening here is that you build leverage over time. The longer the strait remains closed, we lose 13 million barrels every day, 400 million barrels every month. It'd be the best scenario for you if you could keep the strait closed, but not get bombed for a month. And that's essentially what they have right now. Now they're in the situation where, sure, there are legitimate strains in the Iranian economy from the blockade, no doubt. But in general, Iran had a 6-week head start on that pressure, given that it took 6 weeks for them to impose the blockade. So I think that for me at least, I see them as having the strategic patience here. And I laughed. I'm just going to pull you up the exact quote because I laughed quite a lot at Trump's tweet this morning. Basically said, "Please be advised that I am the least pressured person ever vis-a-vis this kind of reopening of the strait." And it's like, I actually want you to be much more pressured because we actually do need this thing reopened. And again, I'm curious. It's funny, Marko, that because at the beginning, I actually think we're generally in line. I actually think I've always thought this was going to end with talk out. Right? I always thought that Trump was going to eventually unilaterally de-escalate once the cost of continuing the war got too large. But every time he seems like he's about to, the market sells off and it reduces the pressure on him to finish the war and to actually make a concession. So it's this ultimate, like the taco paradox.
It's reflexivity of the market that George Soros writes about in The Alchemy of Finance. So for sure, I think you're right. Yeah, it gives him a false sense of complacency of time.
Yeah. And I think now he also has this thing in his mind, following the reposting of a particular tanker map that...
So I want to get to that.
I was going to say, thanks for that.
Well, yeah. So Rory, I want to get to that. So first of all, to answer your question, yes, I think both Jacob and I agree that Iran is in the driver's seat and they have leverage. But as we've said countless of time to the people listening to this podcast, so they're going to be like rolling their eyes right now, but you can lose your leverage. You can abuse it and you can lose it. Canisters and cannibalism. This is why it's hard for me to be like that much of a doomer, because if we get to that point, no country on earth, including the biggest critics of President Trump, like China or Spain, no one remembers who started this war. When we get to canisters and cannibalism, there's only one country everyone's going to hate, and that's Iran. Like, if you have social unrest in Indonesia, if you have people starving in Bangladesh because urea is not coming through Hormuz, no one's going to be like, well, Trump started this. We all know who's keeping the flow from exiting. And at that point, the pressure on Iran rises massively. And that's why in the 1980s, Iran and Iraq both hesitated to, like take it all the way, because you can use this card and they're using it. God bless them for it, but it's dangerous. Now, I do want to get into these 4 questions that I want you to rank
Yes.
All right, so I'm going to go quickly through these, and then you tell me.
I'm pulling back up the list of my options so I can see on quick reply here.
So, and I'm going to do this in a facetious way as an idiot on Twitter.
I love it.
Or a leader of a major country on the planet Earth.
Which is basically the same thing.
Yeah, thank you, Jacob. Your Charles Barkley's coming out. Nailed it. I hope everybody heard that because that was brilliant. All right.
Oh, don't worry. This microphone picks up everything that I have.
Well, it has
it'll slide right in.
We'll ask Shmoo to make sure that's like. All right, let me ask you this, Rory. What about America, baby? All these tankers are coming to America. Rory Johnston, I don't know who he is. He's a good-looking man. He's a good-looking guy. Too bad Jacob is too cheap to put this on video, because then you would see how good-looking Rory is. Actually, it's Marko who's too cheap, by the way, but like we'll just leave that aside, because I think like Trump would blame you, Jacob, because you're like more like, anyways, doesn't matter. Anyways.
I'm still putting some of it on video, by the way. Not all of it, but I'm still.
Anyways.
Just so you know.
Anyways. Good-looking guy, Rory, and he gets it. Let me tell you, he gets it. He gets that America has crude to supply the whole world. Which stage of 1 to 4 would you select for this comment?
That's a snarky tweet, I think that one's a snarky tweet, and I think I've mostly reacted through snarky tweets to that one. Although I may have also poured myself a drink while snarkily tweeting. But I think again the important thing here is, and I would say to Donald Trump, the reason you have people coming to the United States to get oil is because they're willing to pay more for it than you are, which means that your domestic prices are going to rise if you want to have any petroleum left in your economy.
But wait a minute, Rory. Wait a minute. I'm surprised by that. I'm surprised it's not at least dousing yourself with gasoline, because like maybe I'm just an idiot, but like, how is it possible that the U.S. has extra crude to share with the world? I mean, U.S. is a net importer of crude. I know it's an exporter of petroleum products, but like this, how does this help this crisis? How can America add to global supply? It imports Mexico's and Canada's crude for domestic production. This cannot fill that, what is it, 13 million we're missing?
Yep.
We're at 13 million, like, right?
It's why we conquered Venezuela, Marko. You're missing the fifth dimensional chess. We just take that Venezuelan oil, we ship it right to them, you know?
Exactly. But no, I mean, to your point, it is not. There is zero new supply. What it is essentially the natural balancing mechanism of the market, spreading out an area of adequate supply in North America. Again, North America right now. Again, and where I wouldn't just go directly to dousing myself in gasoline is I think it does expose the fact that like North America is now currently the most energy secure place on Earth by a long shot.
But it doesn't have extra crude. Like, there isn't like an extra barrel for like Indonesians are now suffering, whatever, like bad example, but like South Korea.
Yep.
Like, there's no extra, we don't have extra crude around other than the strategic reserve. Am I wrong? Like, what am I missing?
You are not wrong. What would likely happen is you would likely import some more oil from, let's say, Latin America, but you would export more of, WTI to Asia. And I do think that maybe you could see, probably we'll see some refining run cuts as well in North America. It depends on which refineries are most aggressive to bid this. And I think the question is whether or not the United States exports more crude oil or exports more refined products. Because the United States is also a large exporter of diesel. And diesel is one of the most starved markets right now. So I would say, I think the bigger question is not how much more is exported, it's where it's going.
That's interesting.
Because right now, the vast majority of U.S. diesel exports go to Latin America. But Latin America is not the area that's most likely to pay the highest dollar for those imports. So as one thing I've stressed from the beginning of this is if this keeps going, and if we do get a true 10 million barrel a day demand destruction hole that we need to fill, we likely, as long as trade doesn't start getting mucked up, which is definitely an open question, but as long as it doesn't, I do not think that we're going to see large-scale shortages in North America, Europe, advanced Asia.
Yeah, poor get poorer. Like that's
poor get poorer, right? It's whoever has the lowest propensity to spend for the barrels.
And by the way, this is why The Economist, like I just love them. God bless them. God bless their little hearts. But when they were like, Europe is going to freeze, I was like, brother, they're not going to freeze. The ECB is going to print money. They're going to use the money, and they're going to buy a shit ton of LNG. It's more like the poorer
The Philippines
countries
might have a military coup.
exactly. Okay, second question.
Okay, all
Rory.
right. Long answer to the first one.
No. I want long answers. I do want, like, I'm surprised that you weren't as, like, that wasn't as idiotic of a statement. But it doesn't really help us. Like, that's the point. Like,
No,
these
it
tankers
doesn't
are
help
now.
us, and it's more of a my only worry there. And again, because Trump took my map, and now I'm worried I changed the course of world history. Very, a tiny little piece of my soul. My worry is, like, if this does change his view to extend the war longer.
I think he did, brother.
I don't like that, Marko. That makes me want to douse myself in gasoline.
Rory, embrace the philosophy of the other T-Dot legend, Drake. You got some extra Twitter followers. You know what I mean? Like, it's all that matters. You did it for the gram. Let's go. All right.
Did it for the gram.
Second, now this one, I'm going to use my not tech, finance bro voice, because this is now becoming popular in finance bro circles. And it's like, bro, Rory, stop being such a doomer. All right? China's just going to have a buyer strike, and it just makes everything fine. China's going to stop buying from Hormuz because they don't need to, okay? They loaded up their storage, and that buys us like 6 months where we don't have to give a fuck about 13 million barrels. Go. Why is that wrong? And which level of dousing yourself in fire you are?
All right, now I think I'm at the dousing myself in gasoline stage. And I will say that the one, and just as a corollary to this kind of statement, one thing I have heard increasingly from the finance bro community is that, look at Rory, stop being a doomer. Look at the prices. WTI is under $90. Clearly, this has proven that, quote, we don't need Hormuz. And that is where I go straight to lighting myself on fire. I've had the number of crypto bros I've had being like, bro, look at the price. We clearly don't need Hormuz. This was all for nothing.
The equivalent, the analogy there is crypto bros telling you we don't need fiat currency ever again. We're all going to use Bitcoin. So this is like China's just going to have all this oil come out of storage magically.
Yes. And that's actually an interesting point on this, just as a side note. China has built up roughly 1 billion plus barrels of strategic or commercial strategic storage, whatever they call it. And that was, over the past couple of years, a notable point of demand sink from the market, something we've been following. And, is this something going to be, are they stocking up ahead of an invasion of Taiwan? Or
can I actually ask you something about that? Because we
please.
have one very passionate listener who he knows who he is. And I love your text. Please keep texting me. I want you to keep texting me. I'm not doing this to throw shade at you. But every time I cite the Chinese number in reserves, he keeps on texting me like, you believe that shit? You believe Chinese statistics? You need to get an expert on Chinese statistics on the podcast because there's no way that's true. Why do you feel comfortable citing that number? Because I didn't have a good retort.
So most of the time, China doesn't publish any official statistics on oil inventories.
That's true. We infer it from their imports.
We can both infer it from their imports. So that's a kind of an implied stock build. But there's also, so the main way that, data providers in the current oil market provide estimates of oil inventory is through satellite-based imagery analysis. So there's two main ways of doing this. So the main important fact here, and this is where we get well into the wonky, fun, technical weeds of the oil market, or the oil industry, I should say. Crude oil storage tanks, like the big round ones you see driving past the highway or wherever, they have floating roofs on them. And that's important. And the reason they have floating roofs is because oil is volatile. And if you left a bunch of room open, if you had a half full, you would have vapor that would evaporate and kind of go up, and that would explode eventually, right? You don't want that. Vapor's bad. So you have the floating tank on top of the oil so that you don't have any vapor buildup. But that means that as the tank fills up, the roof goes to the top, and as the tank drains down, it goes down. So you can see both through normal optical satellite imagery. You can basically judge how deep this is by how shallow or deep the shadow is, like the crescent shadow on the oil tank. And there's also this type of satellite called SAR technology that can basically has a better estimate for basically how deep something is, like basically topography. And you can also tell from that, you can basically tell the difference in distance from the top of the catwalks that go around the top of these tanks and the center of the tank itself. So that's where most of these estimates of Chinese strategic storage come from. And again, this is The billion barrels is not pure strategic storage. This is largely inland held stockpiles of crude that are held by Chinese, state-owned enterprises that are mandated to hold these. But we generally do know that crude is there. We have less of a view on, say, what's buried in the underground caverns, because we obviously can't see.
Yeah,
but in general, I think that
would be the problem. That's my only issue with satellite, and that's why we also look at like just imports. Like, you know how much demand there is, and
Yep. I was just saying the challenge with that is that then you have to trust Chinese refining run data in order to infer. And that I have seen many estimates. My own estimates are kind of showing like they're definitely understating refining runs in the NBS, the National Bureau of Statistics data, which is another wonky element of this.
Let me ask you something. Okay, so the third one, we don't have to worry about any of this because building pipelines is easy. The desert is flat. And we can just build more capex over the next 6 to 12 months to expand the East-West pipeline to take more crude to Yanbu.
Okay, now
or
I'll
build
light
that
myself
pipeline
on
to
fire.
Haifa, man. This is what Netanyahu is banging the table on. Just
boom.
bring
Yeah,
it
that's
through
right.
Haifa.
Like, Israel's going to get Abraham Accords yellow. Let's go.
No
Right?
problem
And I
getting
think
it
this
through
is-
Iraq and Syria and the former domains of ISIS.
Yeah.
ISIS is gone. There's no more jihadists. Everything's fine. Just
No,
build the
it's a
pipeline right to Haifa.
geopolitically calm area of the world, guys. It's very normal, very natural to build long linear infrastructure across this area. Not to mention that you'd need Hormuz open to get the steel and pipe equipment in the first place. So that's your first problem. But I think that's where I probably light myself on fire, because then I think it's just this sanguine view of like, it'll all be fine. We'll build pipelines. At the bare minimum, it's probably gonna be 2 years minimum to get a pipeline. If you prioritize it above everything else, I think you'd probably get a pipeline. And you're shaking your head. So I want to hear what you think, Marko.
I just think you guys are just lack imagination. I believe there's a lot of steel lying around in the northwest corner of Saudi Arabia in Neom.
Oh, okay. All right, fair. We just need to refabricate it into linear pipe. So it's just all girders. It's all rebar.
Like,
can you, how hard can it be to ship oil on rebar?
How hard can it be? all right. So,
but I think to that, and again, it's just a timing issue. Even if it was 6 to 12 months, we can't afford 6 to 12 months in the economy.
So it's not 6 to 12 months. I hear you. The only thing is that this is where your question about how long this lasts, it does have implications. Because again, like if we're going for kerosene and cannibalism, because of Iran's intransigence, eventually the whole world, starting with China, by the way, they're going to build that shit in 3 months. They're going to go to Saudi Arabia through Yanbu and they'll build it. And then you don't get any tolls if you're Iran. Like, you got to be careful not to create a pandemic level of global focus in terms of capital, in both material and human capital. Because then it's all hands on deck. We need to extract this 15 million barrels out of the Persian Gulf. And yeah, we'll find ways to do it. And then you won't have any leverage ever in the history of the Persian Empire for the next 5,000 years. So that's when you ask us about, like, what's your time horizon? Iranians would have to be, like, I think quite silly to extend this past another month. Because if you start putting into motion a lot of effort, military, capex effort, that could leave you with nothing.
Well, I think this is our biggest difference, cousin, because I think there's a different threshold for action when you feel like your regime is existentially threatened. So
but it's
you
not
worry
anymore.
about that later at this point.
But it's not
worry
anymore.
about, how do I get something done now if I have to keep it closed now in order to generate things. But I think and this goes back to the strategic patience points, though. They can wait a month. They can
But
wait
that was
2 months.
You were right.
I don't think Donald Trump can, unless Rory tells me, like, if we're May 14th and everything is fine, then Donald Trump can wait. But I'm thinking that he has to do it sometime in the next week or two for the Xi Jinping summit. But maybe I'm.
So I will say on this, I think that I completely agree that Hormuz, from the Iranian perspective, is like a wasting strategic asset. That, like, it's in some ways the same way as the U.S. use of the U.S. dollar as a geoeconomic kind of statecraft piece. That, like, the more you use this valuable piece of infrastructure, the more people will figure out ways around it.
China and Reroutes.
Another
example.
Absolutely. I think even things like helium, I think you're going to see helium production expand elsewhere, which it can be produced elsewhere, which just didn't need to be before. So I think
urea especially. Urea
exactly.
is even easier. Yeah.
So I think that I agree. On the flip side, let me pose something to you. Right now, if Hormuz reopened today, all you'd hear is that every barrel counter is insane. Never listen to them again. Woe is me. But Iran would also, I think, it's like, Hormuz isn't that important, right? The finance bros would have won. And I think that's also not in Iran's strategic interest, to end it before there is a ubiquitous recognition that this was powerful, that this was important. And I think you get to a stage where you're at $150 crude, like all-time highs on prompt crude prices. And then that's when Trump has enough pressure to concede something that he isn't conceding yet. And then you reopen it. I think by that stage, it's still not long enough for people to workarounds or whatever. I should say, by the way, that even coming out of this, even if they don't hold it closed forever, Saudi Arabia, Emirates, Kuwait, Iraq, they're all building pipelines after this anyways. I think that is something that is almost guaranteed, because this is just an existential kind of noose around their necks, and they all know it now. So I would say I would say that ship has largely sailed.
Well, but look, this is where you guys were right a month ago. And this is where I disagree with both of you. I think that they won. Regime change is absolutely off the table. President Trump said on Thursday of last week, I will not extend the ceasefire. And then on Friday, he's like, oh, I was just kidding. I mean, like,
psych.
He's stockhoing to such an egregious level. Like, when was the last time we uttered the words regime change? So like, Jacob, you were 100%, you're right. And by the way, I'm in the same boat. That's why I went long crude on January 6th. I expected this to happen and expected this to be meaningfully different from 2025 or 2024 exchange of missiles and attacks. In 2025, President Trump was clear he wasn't talking about regime change. I'm on the exact same path as you guys are, except now they got exactly what closing Hormuz was intended to do, which is illustrate to the United States of America, you can't do regime change in Iran, and that is no longer a goal. I got to tell you guys, like, I just spent a week in DC talking to all sorts of, like, no one's talking about regime change. The hawks, the biggest hawks in DC, like hardened ideological, they're talking about fissile material. Like, let's go in and get it, like there is that, but like, I think they accomplished. Now, we quibble, and I think that Iranian regime is ultimately going to be the one that decides which one of us is right. But I don't think they want to keep the straits closed to a point where they're just driving this. I mean, look, this is like leverage you may have on a spouse or a colleague or a friend. We all have leverage on people. Like you people owe you favors.
Spouse leverage.
Oh man, I mean, like, well, it depends. Like, I'm not the one that has it, but like, if you abuse that leverage, like, you lose it. And that's what I think, they got what you guys are saying. They closed the straits for. They got it.
Yeah, well, there's two things. First of all, okay, yes, they've stopped talking about the fantasy of regime change, but 4 days ago, as recently as 4 days ago, we have the president of the United States talking about knocking out every single power plant and every single bridge in Iran, which is basically the same thing. So he's not using the phrase regime change because he knows that it doesn't mean anything. It's a euphemism.
I don't
for
think
what he's
that's
talking about, but he's
the same
talking
thing.
about wanton destruction of all of Iran's infrastructure,
Which will
like
happen
that
to
is an
them.
existential threat for Iran.
No, but
And I
Jacob,
take
that
Rory's
will happen
point, like,
to them. That will happen,
happen
to
to
them if they
them?
keep. Absolutely. So like, this is the part of why you need to cash in your leverage. Because if you knock the world into kerosene and cannibalism stage, then of course America no longer has any reason to keep the gloves on. At that point, that will happen to them. Yeah, he will destroy the bridges and the power plants, and that's the punitive air campaign that's coming. That's why you need to cash it in before you get to a point of no return where the West and China and India and South Korea and Japan and Australia, they're all together in this. And they are basically turning a blind eye to
Yeah.
that kind of
So,
want
I
to
so
agree,
Marko,
but
let me.
I think this is
let-
where Rory is kind of right, because like the Iranians, first of all, I'm not convinced that they haven't already lost the leverage. Like, they already let the genie out of the bottle. I'm not convinced that, they open it in 2 weeks, the genie's back in the bottle. Like, we might already be done. And if that's in their thinking, maybe they're just thinking about maximizing things. But I think to Rory's point, if you're in the IRGC and you take a break from making Lego videos and you're watching the Geopolitical Cousins podcast with our third cousin, Rory Johnston, then you watch and you say, we will open up the strait as soon as Marko sounds like Rory. Like, that is our litmus test. As long as Rory's in a corner lighting himself on fire and Marko is just chilling, we haven't done enough. We need Marko to be out there freaking out. And then we can talk about opening the strait.
I'm like a walking
your-
torch of Gondor over here.
The
The one thing I
problem-
will say,
Yeah.
the one thing I will say just to Marko is I'm curious. So this canisters and cannibalism stage. I actually do agree that's a useful framing. In my model of the crisis thus far, I agree that pressure will build on both sides. I just think Trump is going to bend and blink first to that pressure versus Iran. So tell me why I'm wrong.
You're wrong because he's blinked like 3 weeks ago, guys.
But he hasn't yet made the concessions that will get. So for me, the blinking is a concession, whether or not that's domestic enrichment or whatever else. I think that he
also introduced another B word, which is he blockaded the blockade. So like,
sure,
but then he's blockading, and then
he has re-escalated since de-escalating.
Yeah, but like re-escalated in quite, I would say, weak ways, right? There hasn't been
no doubt.
So look, what I would say to you guys is that all you're missing here is the pain that will come to Iran. Like, you're kind of ignoring that side of this. So if we get to a stage where Marko sounds like Rory, they're being turned into a parking lot. The United States of America has taken a very light footprint. Israel is actually conducting most of the attacks against Iran using platforms like F-15s and F-16s, which don't carry a lot of payload. You would have to be really like just ignorant of military facts to assume that what America just did over the 6 weeks is anywhere higher than 5 out of 10 on like.
Surely,
but and they're not. And so they must understand that, yes, when Marko sounds like Rory, the problem at that point is that it may be too late for America then to make a deal with you, because for Trump, when you guys say like, well, Iran may have already lost leverage, so fuck it, let's get whatever we get. You don't want to get Trump into a situation where he cannot reverse some of his losses in political capital, because at that point he has no reason to make a turn. He will take away the taco and he will deliver like fire, fury, and death.
I don't disagree, but I think to that point, as we were discussing earlier, Iran still has plenty of escalatory room left as well, right? We have the Houthis and the Bab el-Mandeb. We have upstream facility attacks. There's a reason that Trump has not engaged in that level of kinetic force in Iran, because they know if they got boots on the ground in Karg or if they started, bombing like the true, even like a 7 out of 10.
But time is something you mentioned, and the time is running out. The problem is, you're right, Iran can escalate, America can escalate. But if you're in Tehran, you know that at some point Rory's math comes into picture. And at that point, America will just go, like, it doesn't even matter what Iran does. If we go off the cliff towards canisters and cannibalism, America has then no more reason to give you anything. It's too late. There's a global recession. And at that point, like, America has to take the gloves off. That's what I would say. That's why I think both sides are in this mutual assured destruction. That's why we haven't really seen that much re-escalation. And that's where I think eventually, like, Iran has to cash in, just cash in while you're still winning. But they could make a mistake. Tip us into this world, and then you'll see what a B-52 does to a country.
No, I agree. I think that like this Iran and like the political culture of Tehran is not the pragmatic, business savvy political culture of Caracas. And I'm sure you guys have talked about this before. Like, that was obviously the plan he had in his mind, was he's going to find his Iranian Delcy Rodriguez and kind of everything is going to be fine. But like, this is the great Satan. This is decades of resistance politics and kind of theocracy built in here. Don't they want some of the showdown even beyond the pragmatism?
I disagree with that. So I would say that the history of Iran over the last 47 years is the pragmatic, like, wheeling and dealing. That's why they've never closed it before. They have this whole game where they have like a Sorbonne-educated foreign minister sip bourbon with you in Geneva, and then they say, but listen, it's going to be very difficult to get like Ishmael to accept this, the bearded, guy who's all the murals. Like, they do this all the time. I think look, IRGC, as I've joked, is a Delaware LLC. But listen, maybe the war has made them, war tends to make people more zealous, more ideological. I'm totally open to obviously this going. But listen, I'm not the guest on the show. You are.
Sorry, my apologies. I just hosted a podcast this morning. I'm in the groove.
The thing is, the reason the reason is, like, our listeners know the back and forth between Jacob and myself. So when I want to give them more of your wisdom. So
all right,
I got one more crazy question. Jacob, if you've thought of one for...
I've got one more. Yeah, I've got one more too. So you go.
If you have one for the gimmick, I mean, especially. All right. The pandemic taught us all how to work from home. All right?
Yes,
Hear me out.
All right,
Hear me out. At the time we were forced to do that, that crushed the economy and so on. We can now do that seamlessly. So yes, the coffee shop next to the office will not get your business. But you're going to be sitting at home in your sweatpants, ordering Chinese food and gaining so from a net economic effect, couldn't we just kind of shave 5 million barrels a day without negative economic consequences? Go.
All right, I would say this probably, dosing myself with gasoline. I don't know if this is full firelight on, because I think that there's a reasonable question here. And I think the difference is that was largely achieved through kind of heavy-handed top-down mandates. And if anything, the weakness in oil markets provided an economic stimulus during COVID. Because I think the other thing that was important during that crisis is diesel demand exploded because everyone was sitting at home, but durable freight demand was at all-time highs. So sure, gasoline was cheap, but overall, I think diesel kept everything afloat. Cheap diesel kept everything afloat in a way that it definitely wouldn't have otherwise been the case in a different scenario. And I think now it's, we would not have the ability to sit at home and order our kind of our Amazon. You're already seeing Amazon shipping surcharges introduced. And I think that's where it starts to pinch on that consumer industrial economy side, where it's, all about freight, it's all about deliveries. And that's jet fuel, that's diesel, that's et cetera. I think if anything, gasoline has always been the weakest piece of the puzzle. Even that is actually starting to rise now. But I think gasoline generally has not been the major thing. And if anything, I think, we were able to work from home for a while, but I think everyone kind of agreed that was shitty. Although I now kind of work at home, so it's been durable for me. But most
all
people,
three of us right now,
exactly, all three of us right now. But most people who don't spend their times on a podcast still go to an office, and maybe they take transit or whatever.
Losers.
But in general, I do not miss having to go to an office. I will definitely say that. But I would say generally that the difference is that mandated lockdowns and work from home in COVID actually provided oil as a stimulus to the global economy.
That's a great
would
point.
Be trying to force the same behavioral change through the pure, ugly logic of price reaction.
Yeah. My question, it's not going to make you want to tear your hair off. And by the way, my children are going to get home in 10 minutes. So if you start hearing screaming in the background, that's what's going on.
Mine just arrived in the backyard, so this is going to be good.
Let's say May 1st rolls around, we get the taco, Strait of Hormuz, we're on the path to opening. Or maybe not. I don't know. I want to take it to Russia for a second.
Yeah.
This is the one that really scares me. Zelensky and Ukraine have been hitting Russian oil export infrastructure. Yep. Stuff has been offline. It's not offline, et cetera. Are you worried about the Russian barrels that are going offline? Are you worried about escalation somewhere else? Is it the Cascade effect that might really get us? And is there some other part of the world that we should be worried about? Imagine a hurricane hits the Gulf Coast this
with
summer.
all those tankers Trump's watching.
Okay, but I don't know. I just wanted you to talk me through that, because that's where I really start to get doomy. Zelensky's hitting pipelines, and a hurricane hits the Gulf, and Strait of Hormuz open again, closed again. Yeah.
I think no doubt we're in just a much more precarious situation right now, and the longer Hormuz remains closed, and the more barrels we lose out of that billion barrels of inventory loss, that's our buffer. So if we come out of this with less commercial buffer and less strategic buffer, in the best case scenario, that's going to make us that much more vulnerable to any other shocks that come down the pipe. To the point about Russia specifically, I think one of the interesting dynamics here, and I've stressed from the very beginning that Russia and Moscow is the greatest single beneficiary of the Iran war, both through an uplift in pricing and through
Canada.
But here's the thing: Canada wasn't sanctioned prior to this, right? Prior to the war, to the Trump administration's credit, did a great job at tightening these around Russian oil, between blocking sanctions against Rosneft and Lukoil in October, punitive tariffs on Indian imports that together basically more than halved Indian imports of Russian oil. Discounts for Russian crude had blown up $30+ a barrel. It was not looking great. And I think that would have continued to really whittle down the financial firepower in Moscow. But immediately, in the first week of this, you saw all of a sudden, Indian buyers clamoring for Russian barrels again. You saw differentials fall from 30 plus bucks a barrel to single digits. You saw landed barrels of Urals landing at premiums to Brent in India, and you have seen the explicit kind of reduction of just one tiny second. Actually, I apologize, guys. I'm just seeing smoke at the side of my house. What is it?
Oh shit! Yeah. I mean, quite appropriate given the gimmick.
Yeah, he took it a little too seriously. Listeners, Rory has self-immolated. I don't know what to do, cousin. I've never been on a podcast where somebody just lit themselves on fire as a
Yeah,
you
fuck
got
it.
him.
Let's short Brent, man. It's fine. It's fine.
All right, we're all good. Sorry about that.
Oh, he's
My
back.
wife turned on
It's
the barbecue, and I'm like, "Where is that smoke coming from?" Anyways, I apologize. We'll quick edit that. Anyways,
Oh no, I'm keeping that in. I thought that was
Okay. That was hilarious.
So that's running
That was
out.
wonderful.
What's
I mean,
the
no, it's
fire?
like the whole gimmick is about you setting yourself on fire. Like,
It's-
we're
it's
keeping this in.
Anyways, so long story short, I think that Moscow was the beneficiary of this, but obviously Zelensky knew that as well. So I think what's interesting about this, to Jacob's point, is it's introduced this kind of pro-cyclicality to the Ukrainian response. That the higher oil prices go, the more incentive they have to hit Russian oil infrastructure to ensure that they don't profit from the windfall. But the more they do that, the more you tighten the rest of the system and prices go ever higher. So it's this kind of cascading upward journey for the Ukrainians attacking Russian infrastructure in the Black Sea and the Baltic. But I would say the thing is that it's been hard to track Russia at the same time as tracking everything that's going on in the Gulf. And I would say generally the market is underexposed to that right now. And I would also say they're also better at getting their kind of facilities back online. And they at one point they had a 40% reduction in export capacity. It was the largest single disruption to Russian oil industry since the fall of the Soviet Union. That was in like mid-March. They're mostly, they can recover relatively quickly. Again, they don't have a strait blocked unless someone's going to block the Baltic. And I think that is the difference, is that you just have this capacity to recover. And that, I think, is the main difference so far.
Like,
Give the Ukrainians any
Jacob
ideas.
and I are like, no.
Don't give the
Danes.
Ukrainians any ideas.
No, fuck that. Fuck that.
Oh.
Danes.
Yeah, or that.
Just old school Denmark doing what it made it a great power. Just like, no, you shall not pass. By the way, Rory, Jacob and I are in the middle of this gimmick that we do, which is the Trade Value podcast, where we rank global leaders.
Okay.
Would you trade this guy for your, and I conceded to Jacob that Zelensky, like, he was one of his top picks. I didn't have him. And what made me change my mind, like, I think that was a great pick by Jacob last year. And, it was this that made me, like, Jacob, we didn't get to this, and we're giving a little preview for our listeners, but this was what made me actually go, like, this guy's a badass mother, Like, he is bombing Russian energy infrastructure while his beneficiaries are suffering from high energy prices. Just doesn't give a fuck.
Yeah.
Respect.
Respect. It is. I even when it first happened, because there was an attack on the Black Sea, the Novorossiysk port early on in the crisis, and I was initially kind of like wary. Like, it's like I was worried almost that, because the reason in 22 that the Ukrainians didn't hit Russian oil then was that the world was going through an energy price spike, going through an inflationary spiral, and there was a worry that, kind of the same way that you're talking about, like the world coming for Iran, that it would ruin global ally support for Kyiv during this crisis, and if they contribute to this further. But it seems like generally they're kind of like YOLO.
YOLO.
Yeah, and
Yeah.
I think in this stage it's like, yeah, hard to blame them, honestly.
Dude, it's been 4 years.
Yeah,
They're fighting for your life. Like, Zelensky's,
Yep.
I know, it's like, I thought it was a gangster move, like, honestly, and it's just, he deserves to be in the top 10. Like, Jacob, you nailed it. Well, Zelensky, definitely hat tip to you on that. But we'll release that trade value a little later. Okay, Rory, I know you hate this. Every oil analyst should hate this. I'm sorry. I pre-apologize, but we have to ask you some dollar questions.
Uh-oh.
Right? Yeah, I know. And you can, like, you know what? Like, this is an unfair question. I just want to say that to everyone. Like, this is a Bayesian process. Rory may say one thing today. He might say something tomorrow, but I'm going to make it easier.
Almost assuredly, actually.
No, but and I'm going to make it easier by like giving you some scenarios, right? So like,
Yep.
Hormuz is open. Oh, by the way, so we've got December 2026 Brent contract is, I think, at 85.5. And Brent is right now, it's like 104, 105. What is it at?
I see it at 106.44 on my prompt Brent screen right now.
All right, cool. So
which is actually high. That's the highest we've been in a while.
So 106 right now, Brent. 85 December contract. Okay. Hormuz open on May 1. What are your... And by the way, we're going to say 0 to 100 just to make it simple. Like, let's just not quibble on like the flows. Let's say it's not open, completely not open, and then it's open, like it's going to ramp up, but whatever. Like everybody announces, you shall pass. May 1, what's your two price levels for those two?
May 1. So for prompt Brent on May 1, here's the thing. Here's the way I think this is going to go. I think that on the immediate resumption of traffic through Hormuz, price is going to drop $20 a barrel in a day. Almost guaranteed at this stage. But I think that after that, we grind higher again as those deficits manifest in inventories. So I would say that in a scenario where we open May 1, that basically gets us to that billion barrel total loss supply. I think that the only way that you do not have, Brent crude over 95, $100 a barrel by December is if you see a second IEA SPR release. I think
or recession.
Or recession. Yes, or a recession, which will just take the wind out of everything.
June 1st. First of all,
June 1st.
With June 1st, first question, from now to June, where do we go? And then how much does it drop on June 1st, if that is the outcome?
So I think if we got to June 1st, so we basically, that's 5 more weeks of COVID, 5 more weeks of COVID, 5 more weeks of Hormuz being closed. This is the similarities in the brain.
Yeah, no, I know. Yeah, I put that in your head with the work from home
100%.
bullshit.
I think at that stage we're, by June 1st, we're probably sitting at 130, 140.
Interesting. Okay.
And I think that if we make it to July 1st, I think that's where we get close to $200.
It's interesting. I gotta tell you, man, it's not what I'm telling clients. I'm far more alarmist than you.
In terms of the price response. Here's the thing. I thought the price response was going to be larger. And that's what pushed me down this Steelman, the market reaction piece I put out this morning. And I think I'm just following my brutal logic. And that, I think, showed that we hit 195 by the end of June if Hormuz has not remained, if Hormuz was not open. And that would basically be 4 million barrel a day loss in March and April and 5 million barrel a day loss from global stocks in May and June. And that puts us up towards of 200.
My view was like, if this isn't over by mid-May, we're going to 150 to 160, 170.
I think that, here's the thing. I think that
non-linear. You're more linear than I would have thought, right? You're quite linear.
I'm a pretty linear guy. Linear infrastructure, linear models.
Yeah.
But no, I think that it's if we assume the draw on inventory is linear. And that is what drives my expected price reaction is pure inventory math here. And I think that there's a chance. Here's the thing is that from this lens, the first run up through the first kind of 3-4 weeks of this was actually an overreaction to in the inventory loss that we have seen, because we haven't seen it manifest in the way we would need to hit $144 on dated Brent. That was likely what you call in the literature a precautionary demand response from physical participants that basically boosted demand in order to get spot available barrels right now for fear that they wouldn't be available later. But we sold off. That was right after that. We got the ceasefire and everything else. And I think, again, that there's a way that we can look through if we assume inventory, SPR drawdowns and the world will do everything it needs. I think there's a way to come out the other side, but I'm skeptical. And I think that there's a decent chance, like if we end up at, June 1st and it's still not open, I think at that stage, like there's a reasonable call that crude stays above 120, 130 the rest of the year, because you just need to fill in that hole. But again, I would have expected us to be higher already, and I'm bringing myself back to the brutal, barrel model logic I've been following, and I'm like, you know what? I'm not overreacting anymore. The market, because here's the thing as well. The other piece of that sanguine market reaction is the jawboning. We've had a half dozen episodes where Trump has come out and said something on Truth Social or to media in the White House, and we've been down $15 on the day. Like, traders, like that's unsurvivable for many kind of positions. So I think that is, there's been a sorting effect. Like there's a compositional effect that the traders that were the highest propensity to be long and bring forward this risk may not have jobs anymore, period, end of sentence, particularly after that first Monday. What was it, like May 9th or whatever? April 9th, where you had that kind of big blow up in prices. Yeah, I think that was really painful. So I think if I was a trader, if I was like trade futures, if I was holding a barrel of Brent futures at like 110, yeah, I think fundamentally the risk is the upside. But like, can I wait for that physical manifestation of tightness? Or is it more likely that just empirically that I'm going to sell off $15 to the downside? It feels like a risky bet.
Have either one of you integrated into your modeling on prices that the Trump administration is objectively incapable of basic arithmetic? Like, have you worked that into how they're making their decisions? I refer you just to this thing about drug prices and RFK Jr. doubling down on that in this Oval Office event where the president, by the way, appeared to have fallen asleep.
I refer to you to tariffs being put on penguins, Jacob.
Yes.
And even worse than that, Marko,
pictures
Canadian
of
crude.
Greenland while he's walking through. I also saw this great quote from Harlan Ellison. It's attributed to Harlan Ellison. The two most common elements in the universe are hydrogen and stupidity. But it's actually a serious question. Like, I can't help but wonder if the Trump administration can't do basic math and that they think they have more time than they actually do because they can't do math.
Look,
like I know I'm being like kind of tongue in cheek, but I'm actually asking a serious
so
question.
let me answer that question to the best of my abilities. I don't rely on my own brain to do this kind of complex stuff. Like, I just don't know it. But a lot of clients that I have are experts like Rory. And so when I talk to people who do nothing but trade crude in Zug and Geneva, and you guys know who they are, like, and I ask them to do the math for me. You scratch my back once in a while, although they kind of pay for my research. But anyways, they did. And one of the things that all of those guys tell me is like, yeah, like Trump's guys were here 48 hours ago. So I don't know if they can do math, Jacob, but like, people who actually do this for a living have been informing the White House. They like, the one good thing about this White House is that they don't think that expertise is the domain of like academics or CFR elites. They do reach out to people like Rory, and they do reach out to people in the financial community who are, I think, level-headed. I don't know, Rory. Like, I don't think that like,
by reaching out to people like Rory, you mean stealing their tweets and retweeting that as examples of the fact that America has oil to export? That's what you mean by reaching out.
I got approval of that ahead of time.
I mean, look, like literally though, like, I mean, I don't know if I don't know, Rory, what do you think? People who trade physical barrels of oil, I mean, I assume are not sanguine, right? Like, I mean,
no.
or rather they're like telling the White House the facts, right?
Yes. And I think to this point, like, there has never been a White House that's been closer with the physical trade houses, particularly Trafigura, Vitol. Like, they were at the meetings in the White House.
I was gonna say anyone, but like, yes, and that's
well,
right.
I'm not like accusing anyone of anything, but I think like clearly there are connections.
That's great. That's great.
Clearly, like, but I do think, to Jacob's point, I think a lot of that more doomer expertise, and I should say I have yet to meet a single barrel counter who is not both alarmed and confused by current market pricing. But I do not think that is making it all the way up the chain, because I do not think that Trump himself, as the decider, is incorporating this information into his view. I think that he has lived a life of kind of overconfident reality distortion fields, and I think he's pretty confident that it's going to hold it. And just to be clear, it's working so far. And I think that is the thing that I worry about, is like, at some point the market does run out of patience and we get real spiky real quick. I don't know what that trigger is going to be.
I don't know if that's right, Rory. I think he is incorporating it. The U.S. military action for 6 weeks was at a 3 out of 10 on a scale of what military action could have been. Everybody in the political risk community, which Jacob and I have fled because it's like full of hot air, but everyone in that community was telling my clients who were paying good money that Carg Island was going to happen like 4 weeks ago, right, Jacob?
That's true.
So my point to you would just be like, I think you're not seeing how much Trump, I think, is scared. And by the way, like, how are we not seeing this? Friday was like the most taco. Like, this was like the largest taco in the world.
Again,
Well,
I think
I'm
I
not saying
don't
he's
disagree.
not scared. I'm just bringing up his inability to do basic arithmetic and trust the advisors you say that he's talking to into his thing. I'm not saying he's scared.
No, I have a much more narrow point.
Yeah,
Man
like-
can't do math.
I was listening. I think, by the way, I obviously we did this gimmick because I love your tweets, you know, and
Thank
they're
you.
just they're awesome, and you're just like, yo, what the fuck? And you know why? Because there is a whole side of this, which is just like crypto and finance bros being like YOLO, you know, shit. But I think that what our little game revealed is that you have a very nuanced and like data-driven view, and I actually come away from it almost like more of a doomer than you are.
I
Again,
come away from it thinking that
remember,
Trump
it's-
can keep up
Yeah.
the war much longer than I thought.
Yeah. Yes. Same. Same.
It's important to remember that I was always a perma-bear going into this, Marko. So
No, but that's important. That informs. But the reason that's important, and you said this yourself, and let's repeat it for everyone listening. Your perma-bearness was based on a supply or like just
Yep.
oversupply.
it was the data.
But that is important today because it's not like you were wrong. It is there. And so we can draw on it longer than we think. What I'm confused by is, given the reality of this, you know, Jacob just made a very important point. Let's repeat it. Like the fact that if the Hormuz is still closed on June 1st, like your Brent call is 130, like the world's
Did I
going
say
to be fine.
130? 150.
All right. Well, that's a little bit different. That's
That's still better than I would think.
yes, I agree with you, Jacob. It's a little bit
And
more
especially
concerning.
once you've conquered Venezuela and, you know, you're just exporting all that American crude, everything's fine, you know?
But here's what I would say. Here's just what I would say. I think you're
That was a joke,
right,
by
Jacob.
the way, listeners. I'm joking. I was trying to get Roy to light his hair on fire, but he's
I should on the
he's
one
wise
hand,
to my trick.
my previous run out of the room to go check on the fire
Oh,
in
that
my
is the
backyard.
food.
Literally, I DM my wife being like, "What's that?" My wife, I'm like, "A lot of barbecue fire," and she said, "What? You can't take the heat?" So I think that's a little flame emoji. So I think that plays into this whole thing as well. She'll enjoy the podcast, I'm sure. She's my business partner as well, I should note.
Well, you know what? There you go. Like no. Listen, I think you're right, Jacob. Like, it does seem like there's more runway, but that also begs the question: why hasn't the U.S. re-engaged militarily? You know, just to kind of fight it out a little bit more. And I think the answer here, and I want to know what you think, Rory. I think on March 30th, and correct me if I'm wrong on the dates, but on March 30th, we achieved mutual assured destruction. And this is why, to me, and maybe my brain is broken. I'm completely open to, I'm just wrong and my brain is broken. But if anyone who tells me that the war is going to restart kinetically, you're almost asking me to forecast a nuclear exchange. Because on March 30th, when Israelis struck South Pars and Iranians struck LNG, like what we achieved is this moment of mutual assured destruction where it's very clear that within 24 hours, we can lose 30% of LNG on the planet?
Yep.
And 20% or thereabouts crude. And so, you know, was that a key moment for you? Like, what did you think of March 30th as an energy expert? Like, I mean, this is like, holy fuck.
Well, I think that was the realization of the tail risk fear we all had, which was that this is not just Hormuz being closed, which is how I always liken to like the garden hose being kinked. It can always be unkinked. But if upstream facility attacks are taking a shotgun and blasting off the faucet to which the hose is attached, everything can be repaired, but that takes a lot longer. So I would say, yeah, absolutely. I think that in that moment, it crystallized Iran's kind of escalatory logic and very tit for tat. So it's like, if you hit South Pars, we hit Northfield infrastructure in Roslov and Qatar. If you seize Carg Island, we'll take out the Ras Tanura loading facility or Abcake or whatever. So I actually agree with you. I think that it's unlikely that famous last words by the time this even goes live.
That's fine.
I think it's unlikely that we go back to a full shooting war. I don't think that Trump has the appetite for it. I think, if anything, that is the thing that the market has read correctly. If the market was pricing in any tail risk of the truly catastrophic upstream facility attacks, I think that is mostly behind us now. For me, again, it just comes down to a timing of how long does it take to build the pressure to get him to make a concession he needs to make.
Breaking news. You made me check.
God.
Rory,
Rory,
you made me check. Why did you make me check when you say famous last words? All right. But listen. This is interesting. U.S. President Donald Trump says he could make a deal right now, but he is willing to wait for an opportunity to reach an everlasting agreement because he tuned in live into the Geopolitical Cousins and heard the math from the great Rory. And he said, "Don't rush me." So he doesn't seem to be rushed. And I think part of that is because, you just taught him the math.
Yes. Well, my ongoing education of Donald Trump is something that I need to stop. But anyways, I think that I lean against the most doomer elements of the oil market because I have faith that the oil market can be quite flexible. But I do think that the longer this goes on, one, I think that Trump's leverage decreases faster than Iran's leverage decreases. That for me is a kind of a core prior for how I view the situation right now. And I think to this question of if they were ever going to ramp military escalation, they needed to do that 6 weeks ago. Starting this 8+ weeks in, you're doing the worst of all worlds. You've starved the world for 2 months of Hormuz, and then you want to speed run the apocalypse of upstream attacks. It's the worst possible combination. And by this stage, there's a plausible reality. If you had gone 9 or 10 out of 10 at the beginning, you could have literally conquered and cleared out Hormuz by now. Maybe not, but I think there's a reasonable opportunity to have done so. Now it's no. They've really entrenched. They've really doubled down. And again, they have 6, 7, 8 weeks head start. That I think is the challenge that Trump needs to deal with. So when he says don't rush me, rush, please, Mr. President, rush, because we don't have time. Because again, sure, getting to 150 doesn't sound like the end of the world, but it's going to be the end. It's going to be really painful for a lot of people, right?
The other problem with what you're saying is if we think that, the Iranians could think that. And if the Iranians think that, they're going to get intransigent. And then the only way for Trump to reopen things is to actually hit them harder again.
I think, I do think that what he said is very sanguine, though, because he's not talking to Iran. He's talking to the media. He's talking to the domestic political constituency of America, many of which are hawkish, at least within his, White House. And he's saying
and certainly most of which are stupid.
Yeah. Because you know why? Because of what Rory just said, by the way, in something you and I have pointed out, you go into this action with 8 Arleigh-Burke destroyers in Strait of Hormuz, you go in with no troops on the ground. Of course, your options are then limited and you can't open the Strait of Hormuz because you got no Aegis-enabled destroyers. So they went into this unprepared, and I think they're where they are. So,
the last thing I'll say here on the timeline as well is that kind of 150, 200, if it goes through July or the end of June, I think that's best understood to be a fair value estimate. There is a chance that right now, we had physical traders overreact potentially the first wave of this, the first kind of volley. Right now they're optimistic. Everyone's optimistic that this is going to figure itself out in some way. They can get pessimistic again. And if they start precautionary, kind of demanding additional barrels and bidding up physical premia again and everything else, we can shoot well past that faster. I just don't know. I think it would be a rally that would be still equally prone to these sharp, kind of jagged drawdowns if a tweet sounded sufficiently, end of the war. Yeah,
makes sense. All right, we got to put a pin in it. We put an hour and a half on the calendar, and that's what we got.
It flew by, guys.
Yeah, no, it
flew
did.
by.
It really did. It's such a pleasure to have you on, Rory. Like, you crushed it. And I really hope that everybody who listens to this Geopolitical Cousin goes to all the stuff you said at the beginning. This is awesome. Please, next time you tweet something, use finger paint, like make it pretty obvious, like what you're trying to say. Like, let's not,
You mean I shouldn't lead the tweet that could influence the war with very cool? Because yeah, that could have been a long-term
that was the
regret
trigger
on my end.
That was the trigger. That was the trigger.
People are like, very cool, Rory. That's what you go with. I'm like, anyways.
Awesome, man. Thank you so much. We're so grateful that you spent time with us. Really appreciate it, man. You're awesome. Thank you.
Thank you for having me on the podcast, guys. It's a fantastic one.